Well, Zachary Kirkhorn of Tesla just stepped down, and a lot of people are wondering, is this a really bad sign of things to come over at Tesla? The last time this happened was actually when Zach got his job. It was when Deepak left in January of 2019. Tesla stock dropped about 4% right after that because usually people associate a CFO leaving with some kind of impending either legal investigation into finances, declines in the business, or some kind of other massive stress coming up at the business. Otherwise, why would you leave a job that pays pretty dang well? At least when you look up the latest reports, Zach, the current, now leaving CEO, was paid around a base salary of just upwards of $260,000, but stock-based comp was in excess of $40+ million, to where Zach could have created a net worth of potentially as much as $100 million just by working at Tesla as a CFO for the last 4 years and a total tenure at Tesla of 13 years. He started out as an intern at Microsoft and eventually got into the finance department at Tesla, where he worked his way up to CFO. So now it's worth analyzing, all right, what do we potentially think is happening here? Because as we know, Elon told us in the last shareholder meeting, the annual shareholder meeting, that this next year will be difficult. Not only is Tesla going to be launching the Cybertruck, but it's going to continue scaling Austin, Berlin, Northeast Mexico. It's going to be dealing with supply chains, staff changes, margin changes, pressure from Elon. And Zach mentioned in his last earnings call that he conducted that the company is now going to take more of a focus on operating margins instead of just vehicle margins. And this is a pretty interesting transition. Zach claimed that this was due to the company's greater focus or greater growth rates from the energy side of the business, and so therefore it would make sense to evaluate the company based on operating margin rather than just gross vehicle margin. Of course, others say Elon Musk hopping in and suggesting we could sell these cars for basically no gross vehicle margin and make it all up in FSD could potentially have been a place where Elon and Zach had major differences, especially since recognizing revenues for full self-driving, a product that still is in beta outside the autopilot portion, still in the works, and this idea, actually being able to fully recognize this revenue isn't really possible until you have a complete product, right? But then on top of that, you also got to remember, hey, Elon said in the last earnings call, hey, we're thinking about licensing our FSD or autopilot to other manufacturers, like maybe a Ford or GM. But then again, Elon also said that a few years ago. So this has been said before, which all kind of goes back to, is there potentially a high expectation from Zach to do exactly as Elon wishes, and under the pressure of Elon, potentially the high stress levels of the job lead to something where Zach, who's now 39, says, I'm out. It's entirely possible. In fact, Fortune just put together a piece talking about how during these recessionary environments, it's extremely common for individuals who are working at a company like Zach and his husband. Apparently they got married May 6, 2018, so they've been together for a bit here. Daniel, by the way, used to work at Open Table and now works at, I think it's like a medical startup also in Austin, Texas. Both of them live in Austin, Texas. In fact, they moved to Austin when Elon moved to Austin and ended up buying a $3.3-ish million lakefront home in Austin. So clearly seemed committed to Austin. Even the husband moved to Austin from the Bay Area when Zach moved his position over to Austin, the new Tesla headquarters. But again, what's the big thing that we analyze? Well, Zach, being 39, having made a lot of money at Tesla, maybe has gotten to the stage of burnout. And this is kind of what Fortune had been alluding to. Fortune magazine had been alluding to this idea that executives during recessionary times and now tend to leave. They tend to burn out because transitions are happening so rapidly and the job just isn't what it used to be. Now, every company is not focused just on revenue growth, but on margins, layoffs, artificial intelligence, looking at dealing with investor relations in a different, more uncertain, and potentially frustrated way. These are all things that add serious stress to a job. And don't get me wrong, Zach was compensated extremely well, which is a sign that Tesla highly valued Zach. But that doesn't mean the job isn't stressful. And so when I kind of think about what are reasons why Zach could have left, and I break them out, there are a few particular reasons. Number one would be bad numbers coming for Tesla. Elon kind of alluded that the next year would be difficult, but if it was just bad numbers, Zach's compensated enough to get through that, right? Another option is stress, basically what I've been outlining in this whole video. I think this is much more likely. Some kind of stress and executive burnout, made enough money. What does extra money at this level actually matter? Like, you're 39, you got plenty of money. Maybe just retire without actually calling it retirement. Some people say maybe Zach's open to a new opportunity or some kind of startup. And I think while in the future he probably will be, I think this is kind of going to be like a breakup where you need some transition time before you just hop over right into a new opportunity. And I don't think somebody would have been willing to pay Zach as much as he was making at Tesla to convince him to transition to a new opportunity. So I don't think it's a new opportunity. I don't necessarily think it's just bad numbers for Tesla because, again, you're compensated well enough. I think this is much more likely to be burnout. I think it is hard, though, to say, and I think this is why we don't see it in his outgoing LinkedIn message. I think it's hard to say, yeah, I'm going to retire after my 13 years at Tesla because I'm burned out. I think people would look at this and go, really? Like, you're 39, seriously, you're burned out? Like, put some pants on and get with the program. But I think that actually could be the real reason that this is a very stressful role, and being willing to say, oh yeah, I'm retiring is not exactly going to be the most popular thing to say at 39. So it's much easier to say, hey, look, had 13 years here. I'm going to help the company transition through the end of the year. Thanks so much, Team Tesla, which is basically what we got here. It's also worth noting that if there was really bad blood suddenly between Zach and Tesla, Zach probably wouldn't stay around to the end of the year, though the extent of which he'll actually end up staying around to the end of the year, nobody knows. He could say that today and quite literally pack his bags tomorrow and be gone because they're like, all right, we're good, transition over, we're good, right? So there is a real potential, in my opinion, that there was definitely pressure and stress from Elon to make sure we're recognizing that FSD revenue, to, streamline the number of staffers working in the G&A portion, which includes the finance department. There's definitely going to be pressure on margins and stress. And I think it's likely that after 4 years of CFO and 13 total years of the company, it's totally possible that Zach just decided, you know what, it's time for me to step down. Obviously, this is leading Tesla stock to sell off. Remember, in 2019, it sold off 4% on a CFO departure, and that didn't really affect the long-term outcome of Tesla. It is a little surprising, though, because Zach was often seen as the person who could basically run Tesla earnings calls and talk to Tesla investors the way a finance person should, rather than sort of the more theoretical way that Elon likes to talk to people on earnings calls, or scientific way, some like to say. Instead, people like numbers, and Zach was kind of seen as not only somebody who could run those earnings calls, but also potentially somebody who could take over as CEO in the future. Both of these things, a little bit of, let's just put it this way. They both mark a sad day for Tesla, as Zach will certainly be missed, and a lot of people will be very, disappointed in Zach's departure. Though I personally think This is all related to a combination of rough year for Tesla, stress, got plenty of funds, time to move on, maybe focus on traveling or focus on, spending time with family. It's hard to publicly say spending time with family if you don't already have kids. I don't believe Zach has kids. So it's harder to say, oh yeah, I'm going to retire, I'm going to spend time with family when you don't yet have kids. But maybe that's part of the next chapter. Maybe they have a surrogate and they're getting ready to have a child. Who knows? There's so many things that could be going on. I can't really pinpoint exactly what it is because nobody will truly know the right reason. Do I think this is a reason to look at Tesla and say, that's it? Elon's going into surgery, Zach's stepping down, the company's screwed, sell the stock? No, of course not. In fact, the broader market is unpricing a lot of the recent euphoria we've had in the stock market. You could see that most heavily when you zoom into some of the smaller cap stocks that have really had some run recently here. Look, for example, at Upstart, or you could look at, Quantum over here. You could look at Camber Energy. You could look at C3AI, Moderna, Redfin. A lot of these companies, Beyond Meat, Open Door, a lot of these companies that have gone really euphoric. I mean, Open Door almost to $5, now back down to $3.30. Redfin was running like crazy and all of a sudden now resetting back down. A lot of this recent stock market hype and euphoria is definitely being corrected back down. And to some extent, that's very healthy. It's part of the Nike swoosh recovery. And I've always called it a volatile Nike swoosh. I can't say that it has been a very volatile Nike swoosh so far. It's basically felt like very straight up. But I've always called for volatility. And this is what we're seeing here. So I don't think anything here is super fundamental or super concerning. And so in my opinion, I think this is just more of the same, stock volatility, and we've got to wish Zach the best. That's my take. Good luck out there, and we'll see you soon.
Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced by artificial intelligence. If you can master AI by starting on the ground floor, let's go.